Hi, everyone. It's great to have you with us for our virtual summit today on the topic of how to future-proof your CPA firm. My name is Matt. I'll be your host for today's event. Today's summit is put on by PracticeERP, which is a firm management software designed for the modern firm. PracticeERP enables firm leaders to get away from the hassle around the day-to-day to operations and provide more value to their clients. And as today's webinar progresses, we will talk through some of the key topics around being successful in today's environment and also get a chance to see PracticeERP in action. Before we get started today, let's go through our housekeeping items. Today's webinar qualifies for 3 hours of CPE credit. To get credit, make sure to remain logged in for the duration of our time together and respond to the poll questions. Now, there'll be 13 CPE polls spread out throughout the event today. As long as you respond to at least 9 of those, you will qualify for CPE credit. If you qualify for CPE credit, you can download your certificate, and that will be accessible from your Incorsa account starting 1 hour after our time concludes today. If you have any follow-up questions on CPE, feel free to reach out to us at any time at support@incorsa.com. You can download a copy of today's presentation from the handout section in your pop-up GoToWebinar pane. We also attached it to your Incorsa account, so if you have any issues downloading it during the event today, you can download it from your account at any time. Today's session will be recorded, so if there are any sections you'd like to go back through again, we will post that recording to your Incorsa account. You'll have on-demand access to go back through that, and we'll post that at some point this evening. We want today's summit to be interactive, so feel free to submit your questions in that questions section within your GoToWebinar pane. As we have time throughout today's session, we will respond to those questions. If we don't get back to you on your specific question during the event, the PracticeERP team will be happy to connect offline. Given the duration of today's webinar, we will incorporate a few breaks, which we will announce throughout the event. Well, we're really excited to have Dirk Schimpaw and Tim Moy back with us to present today. Both Dirk and Tim have extensive backgrounds in the accounting industry. In addition to their work with PracticeERP, Dirk is a partner with Go Virtual Office. He has over 20 years experience with working with CRMs, ERPs, and accounting software. Tim is the managing partner with MBE CPAs, which provides accounting, tax, and consulting services. Dirk, Tim, thanks for being here today. I'll turn things over to you to share a little bit more about yourselves and kick off today's presentation.
Great. Thank you very much, Matthew. Yeah, my name is Dirk Schimpaw. I'm one of the founding partners of a company called Go Virtual Office and PracticeERP. A little bit about my background. I'm, for the most part, the last 18 to 20 years have been in the accounting and ERP space, mostly around systems, financial systems, and helping businesses kind of automate their processes. We've kind of taken some of that background and are now bringing it to the CPA firm industry. So thank you very much for your time. Tim?
Yeah, Tim Moy, managing partner of MBE CPAs. Just maybe a little bit about our firm profile. We have 12 offices across 2 states. Our headquarters is in Wisconsin. We have around 225 employees. About 30% of them are virtual. And then we also have employees in 4 different countries, including India, Philippines, Bulgaria, and West Africa. So we've definitely gotten creative around HR.
And Tim, tell me, like, what kind of services does your firm provide?
The traditional services of a top 250 firm. So everything from assurance, audit, comps reviews to tax, mergers and acquisitions, cost segs, business valuations. We have a pretty large CAS department. We have a large payroll department. And then we have about 9 affiliates that do everything from business brokerage to wealth management, to marketing, to HR. And of course, our partnership with Go Virtual Office, which is how we joint ventured to develop PracticeERP for the CPA industry. Super exciting. We've been on PracticeERP since July of 2021. We've run it through 2 tax seasons, and we're just really excited about the future.
Great. All right. So yes, like we were saying, please contribute. Ask questions. We have about 13, I think 12 to 13 survey questions as we go through. So we're trying to make this as interactive as possible. We do have a lot of content to cover in the next 3 hours. There are going to be here's the agenda. There are going to be a couple breaks, so just so you know, we got some scheduled breaks in here for 2 10-minute breaks. But our our agenda today, we're going to be kind of talking about, you know, what are the challenges that the CPA firms are encountering. We have a certain vision of how to maybe start to address some of those challenges. And then we're also going to be talking about some capitals, brand capital, human, financial, and system capitals. And we'll kind of be wrapping that up and kind of, you know, how strong are your capitals for your firm? And then, you know, finally, are you ready? Is your firm ready for the next 3, 5, 10 years? So hopefully we've got some tips and tricks and some strategies that you can, you know, take from this particular webinar. So again, we just kind of went through introductions with myself and Tim, so we can move past this slide. But today's challenges. So we kind of break down these challenges into 4 things: people, process, systems, and the changing landscape. So let's kind of look into these in a little bit more detail. So this is actually our first survey question. If you had to choose one, what would be your biggest people challenge?
Thank you. And that survey question is now launched. That's up on your screen. And throughout today's event, we'll give you about 30 to 45 seconds to respond to these poll questions. So please do get your responses in. Make sure to click the submit button so we can track that for CPE credit. But yeah, that question is up, as Dirk had mentioned. This is around the people challenge. Which one of these would you say is your biggest challenge? And that's talent pool and recruiting, productivity, accountability, culture and engagement, training, or turnover. So we're getting good responses from the audience right now. We'll keep this poll open for about 10 more seconds. Okay, thank you everyone in the audience for your responses. We'll go ahead and shut this poll down. And it's a kind of a mix out there, but we're definitely kind of leaning towards the talent pool and recruiting is definitely a challenge right now, as well as some people saying the productivity and accountability as well.
Yeah, and this is kind of what we've seen through past webinars that we've done around this, and other people that we've talked to in the industry. You know, recruiting historically, especially since COVID, has gotten harder and harder. We're actually going to talk about some trends in this that we're seeing. But Tim, what are some of your comments around the survey?
You know, I would say really even in the last year, what's really exciting for me is I think we've developed solutions to every one of these issues. You know, and it's interesting because what the question is, what will we have to compromise compared to how we've traditionally addressed these issues? But if we're willing to compromise on some level to adapt to the new environment, I think all of these can be readily solved. And so it's just super exciting. I don't know, thinking back over my career, I don't know that I've ever felt that I could solve these problems with any regularity or certainty. And today I absolutely do. So I'm excited to share how we can do that.
Great, thank you.
Yeah, so again, this is, and it kind of aligns, you know, the draining talent pool, productivity and accountability. This aligns exactly with the results. Engagement, culture is super important. I know with our firm, we take a lot of pride in doing a lot of things to make sure we have a strong culture, and which helps with, you know, less turnover and everything else. You know, putting resources behind training and so on and so forth. But yeah, you know, Tim, how do you think your firm, you know, from the ability to manage proactively versus reactively? Do you have some?
So we have the software now that we in our firm called PracticeERP, and really all of these bullet points here fall under culture, right? But you want to breed self-accountability. You want to breed what we call collegiate or pay it forward training. You want to breed certain things that, you know, people basically own their desk, they own their career, and we're just guiding them to a stellar career. So, but all of that rolls up to culture, right? Helping each other, helping our clients. And I think a lot of times the CPA industry is, our leaders are a little bit introverted. And so we have a hard time articulating, just what a great career and great life we've had. But I do think there's answers for those out there, and they're exciting. So thank you.
Yeah, and we'll touch on, we're going to do a kind of a deeper dive and talk around some very specific things around, talent, draining talent pool, hiring, this younger generation, how you can, start to address that and attracting them into your firm. Productivity, will definitely be keying in on that, and accountability as well. We have some strategies around that. So stay tuned. We've got some pretty good stuff coming. So Tim, do you want to talk about this slide?
Yeah, so this is the interesting dynamic that the CPA industry is in, and it's really as a result of, lots of successful baby boomers in our industry. But the reality is that a large majority of our producers, our leaders in our industry, are going to be retiring in the next 10 to 15 years. And I think this is something we've always known, but to actually put it to a picture that 3 out of 4 people in our industry either need to be replaced with a on-site domestic human, a remote domestic human, an international domestic human, AI, or more efficient processes. There's lots of ways that we can do this. And again, we all understand that for the 25% of the people that are in the industry, this actually indicates a bright future because of supply and demand. So we not only have to recruit more people into our industry, but we have to figure out how to get more efficient at what we're doing. And I think there's lots of good ideas there.
Yeah, and I know we have some, we're going to be talking a little bit about AI. I mean, that's all you read and hear everywhere today is about AI. But we'll be kind of touching on AI and how that can help, maybe not replace all of the 75%. You also brought up, changing processes, improving your efficiencies. But these are all things that firms need to do to address this departing talent pool.
This is definitely a hard trend. So we need to concede that it's coming no matter what we do.
Correct. All right, this is our second poll question. So we kind of talked about challenges around people. Now we want to kind of have what are your biggest process challenges?
Great, thank you. And that poll has been launched. That's up on your screen. So as we look at some of these process challenges, I know a lot of people are saying all the above, but what would you say is your biggest one? So lots of inefficiency, duplicate work, too much done manually, slow to automate, integrate, or finally lower utilization, realization, and profits. And again, we'll shut this down at about the 45-second mark to give you time to respond to this poll question. Okay, the responses are coming in good. We'll go ahead and shut this poll down. Thank you everyone in the audience. And again, on this one, we're a little bit spread across the board, but a lot of people are kind of focusing in on doing too many things manually right now.
Yeah, one of the things we'll definitely be talking about, systems and disparate systems. A lot of times that is one of the things that drives manual work. It also does drive inefficiency. So we'll be talking about that. And just to kind of, this is, lots of inefficiency, duplicate work, all of these things is, kind of just aligns with what we're seeing here. Tim, what kind of comments would you have on these poll results?
Yeah, I'm super excited. At our firm, we have done some things like we've automated timesheets. We've automated the process through click-to-pay technology. It just seems like this the most recent filing deadline, we attacked that with just an amazing amount of efficiency as workflow. So we definitely think there's a lot of automation that's already available and a lot more coming through using an ERP system.
Great. All right. So this is our third poll question then we want to kind of talk about is systems. So what are your biggest systems challenges?
Great, yeah. Now let's transition towards the systems perspective. So is it too many disparate and outdated systems, spreadsheets everywhere, time-consuming data entry, slow or poor reporting, or finally no actionable insights? And we'll keep this open again for about 45 seconds to collect those responses. Okay, we'll shut this poll down in just 5 more seconds. Thank you, everyone in the audience. We'll go ahead and close it down, share the results. And as accountants and CPAs, we love spreadsheets, right? We can't deny that, but they can become a problem. I think people are acknowledging that in these results.
Yeah, and I would say the spreadsheets everywhere. This is not unique to a CPA firm. You know, our background working with lots of different industries, whether you're a manufacturer, distributor, an e-commerce company, other professional service types, spreadsheets are the middle area, right? If a system can't produce it, or you don't have that the data that you need, or someone whips up a spreadsheet and starts entering data manually. So we see it in every industry across all departments. And the main driver of that is too many disparate systems. Things don't talk to each other. And with this, you get lack of efficiency and not enough automated processes. But Tim, do you want to talk about some of this with your firm?
I really see all of these as opportunities. And it's not that we don't use spreadsheets, but it's how we use them that is changing. By using dashboards or scripted reports, you can get, the right people, the right information at the right time. With using dashboards, you can have live information available to your users and management and admin team real time. So there's just a lot of opportunity out there, and use more spreadsheets really just for taking the data that comes out of the data management system and maybe using it as a quick pivot table so that you can toggle. But we are using spreadsheets less and less for calculations and reporting, and more just for some pivoting of the data. And so for us, we've saved a lot of time because we're doing a lot less calculation with spreadsheets.
Yeah, go ahead.
I was going to say, certainly the data entry too is gathering a lot of interest here too, where people are just inputting too much data. We're spending time on tedious things like that. As we think about the future of the CPA firm, how can CPA firms get away from that data entry, and what kind of value is that going to open up for them?
Well, having an integrated system, you're not having to run a report here and go enter it in a spreadsheet here and run a report here and enter a spreadsheet there. So having everything connected should help that greatly. And even if it isn't connected, there is concepts of integrations where, maybe you integrate your tax software with your client management software or whatever it is, So having real-time API integrations are some strategies. Tim, do you have some thoughts on this?
Took the words right out of my mouth. That's where when we see, we want to cross-pollinate data between two databases, we might use an open API. So we might be using open APIs with our document management system, with our HRIS system, with our soft phone system, and even our client web app, so that we can get the computers to move the data and create the data entry versus manual human entry.
Yeah, the other technology that's getting more and more in the forefront is Microsoft BI or some BI tool, where even if you do have those disparate systems, you can bring them into what is called a single data warehouse, and then do pivoting and analysis off of a single data set too. So that's another place where we see things going in the future. It's all about, like you even mentioned, it's the right information to the right people at the right time, so they can make insightful decisions.
Great, thank you.
So then, the changing landscape. So Tim, has much changed with CPA firms over the last 2 to 3 years? Is it pretty much the same as before COVID as after COVID?
Well, I think the saying that I'm reminded of is the only constant in our world is accelerating change. And currently that's no exception. PE has really started, private equity has really started coming into our industry over the last couple of years. They've made transactions with, big firms, several in the top 100 firms. And of course, several of them now have put up what they're calling posts around the country, and they're acquiring what they call tuck-in firms. And those tuck-in firms can often just be $1 million or $5 million firm. They can be small firms. And so what's exciting about this, of course, is that they're putting a lot of capital into our industry. If you are looking to maintain your independence, it's just a thing that you'll have to keep up with because the competition is going to be stronger. And so whether you're looking to be acquired, looking to acquire, looking to participate with PE, looking to maintain your independence, now is not the time for slow decision making and action. Now is the time for decisiveness and planning. So it's exciting, but it's fast moving.
Yeah, one of the things, and I see it a lot with Go Virtual Office and helping out companies move on to NetSuite. The PEs have always, or for years, been very aggressive with e-commerce companies, with software companies, even with distribution companies. We've seen it all over where they keep rolling them into their their portfolio, and the one thing we see is they don't just encourage, they require performance. Because they want to get their multiple, they want to hold on to that for 3, 5, 7 years, and they want to get their multiple. And the only way you're going to do that is to perform. And that pressure goes all the way from top to bottom. So I mean that's a good thing about PE firms, right? They bring capital, but they are going to force performance in this industry.
Yeah. Yet it's a super exciting time to be what I'll call an owner operator of a CPA firm. Because that you can develop a unique story that will appeal to a certain business owner or client mindset, a certain connection. One of the things that we've always enjoyed in our industry, I think, is connection to the client emotionally. And I think that this will be an opportunity to differentiate firms that want to, tell that story of we're an owner and you're an owner and we want to be connected. So it's just really working on your firm. And it's one of the things that we focus on a lot is that most CPA partners work in the firm and they work on the firm. The challenge is, of course, delegating an appropriate amount of time to work on the firm when there's so much work to be done in the firm. But it can be done and it needs to be done.
Yeah. And, I'd be really curious what this space looks like in 3, 5, 7 years from now. This concept of whether you're a buyer, like you said, whether you want to be a seller or you just want to sustain and grow, you need to be aggressive. You need to think long-term strategy. You need to not slow roll it if you want to keep up with the Joneses. So.
Yeah, the only constant is the ever-increasing pace of change.
Correct. So with all of these, challenges, or we could use the word opportunities, what do you do? How do you future-proof your firm with all of this coming at you? So that's what we're going to spend, the next, about 2.5 hours going through some very specific strategies and ideas for you to kind of hopefully take back. So We fully believe, that CPA firms need to evolve to thrive and survive. So we have this vision for firms to do this, and it really comes around three main things. We're going to talk about the power of a community, and we're going to go into some detail there for sure. The advantage of next gen technology, and I'm not sure I fully like that term, next gen technology, but we're going to talk about leveraging technology and helping out efficiencies and different things, and then these capitals that I brought up before. So this is where we're going to be going. So let's get started. So the power of the community. So this is our next poll question. So are you a member of any peer groups? And if so, how many?
Great, thank you. So that poll has been launched. That is up on your screen. And again, we'll give you about 45 seconds to respond to this. I've always thought peer groups and professional associations they're great to be a part of, and they add a lot of value, making connections. But sometimes it's tough. It's tough to find the time to commit to do it, especially when we're working so much in the firm.
Yeah, we're big fans of peer groups for sure.
Yeah, and I would also say it's not just the number of peer groups, but you also want to be evaluating the quality of, what you're getting out of those peer groups, and of course, look in the mirror and see what you're giving too. It's definitely a big part of our story or my journey.
All right, thank you everyone in the audience for your responses. We'll shut this poll down. It looks like a good majority are at least part of one peer group, but less than 5.
Yeah.
And that's good to hear. So Tim, tell us about some of your experiences. What are you in any peer groups?
Yeah, so for a long time, I was just part of my state society of CPAs and my American Institute. And I wouldn't say I was a very active member. Those groups served their purpose. They served me well. Where I really understood the power of community is I got involved in a PCPS, which is a division of the AICPA, and I got involved in an industry think tank with about 25 other managing partners of similar size firms. And we would get together twice a year. And when I joined that group, we were the second least profitable firm. Actually, we were the most least profitable firm and the second smallest firm. And just by their support, and I don't know that I've ever missed a meeting in decades, but over time they've really pushed me to become a better CPA, a better partner, a better boss. And so that having that relativity conversation with other managing partners has really changed, and it's what drove me to build what we call the CPA 360 community, which PracticeERP is part of. But we're really trying to basically solve every problem a professional accounting or CPA firm runs into.
Yeah. So and we'll get into some specifics about some of the values of a community. So one of the things we definitely see is sharing leading practices. We'll dive into some detail here. Metrics, how you stack up with your peers, and we'll even talk about kind of sharing some service offerings. From my standpoint, I'm also a member of a couple different peer groups. I'm more on kind of the NetSuite side of things. But one thing even last Wednesday, we got together for a good part of a day, and it's just nice to sit down with your peers that, I always use the terms know, like, and trust. And, we're all kind of going through the same things or things a little bit differently. And how are you handling this issue, or what tactics or strategies work for you here or don't work for you here? And every time I leave one of these meetings, I've got 1 or 2 pages full of notes of ideas and things I can bring back to our company, and it's so valuable. So Tim, yeah, you want to kind of provide some examples or some things of, leading practices and what you guys do?
Yeah, so inside of the CPA 360 community, we have a CRM, we have a marketing company, and so what we do is we really share those affiliates with other members of the group. So we might have a wealth management group, a business brokerage, a payroll solutions provider, and we basically license that service to other firms and their clients, and then revenue share back to the participating firm that actually owns the client. So what this does is it opens up money unrelated to time, which is something I'm a big fan of, that I think our industry has been slow to adopt. But money unrelated to time allows, it's high margin. You don't have to acquire another customer, and it allows us to take that money and use it to fight a battle, whether it's technology battle or wage battles that we might be fighting, so that we have a little bit more dynamic business model than just one-dimensional or two-dimensional. So we share a lot of that with our member firms. We've spent a lot of time automating our processes. So the PracticeERP system, right now we're focused on automating and controlling WIP and AR. We've brought, I think my aged AR has come down 70% in the last 6 months. So I'm pretty excited about that through using PracticeERP. And it's really just, there's yet services we don't offer that we hope someday we'll have the resources, or another member firm will have the resources to do, and sell that through the marketplace. So for instance, today we don't do cybersecurity. I'd love to see another firm develop a cybersecurity solution and offer that to MBE and MBE's clients, because I think we'll all be stronger, because again, through being part of the community, as you called out, Dirk, I will begin to know, like, and trust my community members, and I want to help them and they want to help me. So it's, and we have an industry that is built on trust. So I trust people in my industry to perform.
Yeah, and kind of back to this first slide, I know I think you recently got back from one of your MAP group meetings.
Yep.
One of the things you guys do share kind of benchmarking and measurements. Can you talk about that a little bit?
Yeah, so we not only have an internal survey amongst the 25 firms, but we also, spend some real time studying there's probably 3 or 4 national surveys in our industry. So we kind of report on those. And, this last week, we spent a lot of time focused on HR. So we spent a lot of time on how to recruit, how to offshore, and how to import labor. And I'm convinced with a 225 person firm, if I wanted to, I could add 100 people in the next 60 days without any problem. And I don't know that ever in my career I could have made that type of statement. So now it's just, how fast do I want to add them? How fast can I train them? How fast can I pay for them? But it's no longer a choke or a bottleneck that I can't find them.
Nope.
So it's exciting.
And when you guys you come back with some ideas and shared practices, like how easy is it, or can you standardize with your firm and another firm, or I mean, what does that look like when you guys come up with an idea or a tactic?
So today inside the CPA 360 group, we're all on PracticeERP. And so when we talk about creating documentation for standardization, eventually we believe that we will be able to build, and we've already done quite a bit of it. But once we document the process, and then what I call stress test the process and run it over a period of time, eventually we'll have the opportunity to automate those processes to reduce admin time and increase effectiveness. And you'll really see that in the timekeeping, workflow, WIP, AR, collections, cash flow. we're going to see giant benefits in those areas because, again, when we get together, now we put, a group of people working on a firm, but we're working on all of our firms. And so if you get together and huddle up with some of your industry teammates, they'll all have some good ideas and we'll all benefit from each other. And then the fact that we're on a common system allows us to translate those benefits into the system, where if we're all on different systems and taking it back. So what we do is we actually have all the firm administrators get together. We have all the marketing people get together. We have all the recruiting people get together. And there's lots of firms that don't have admin staff in these specific areas, but that's actually a huge benefit to those firms because those firms can send a partner to these groups, and all of a sudden that partner has access to industry experts across many disciplines that a typical small firm could never dream of. So to me, the future is very exciting around these topics.
Yeah, so I mean, when you think of community, the power of many versus the limited power of one. Today, if you're not a part of a peer group or a community, we strongly encourage it, both for your profession and personal. To be honest, I have lots of good friends that are in my peer group. But yes, it is a very good thing, and we have a very structured, which we call CPA 360. That's this peer group that's around PracticeERP, but it's all about leading practices for CPA firms, which we'll get into a little bit later. So yeah, the three things are share leading practices. What's working, what's not. Metrics. How do you stack up with your peers? If a member firm is doing really well in something, try to pick their brain, what's working for them, and if there's an area you're struggling, maybe you can get some input. But definitely, start to find a peer group or two.
And get involved. Yeah, really dive in when you get there.
Correct. I think you said, right, it's not just to take, but it's also to give.
Yeah.
So the next kind of area around vision is, taking advantage of next gen technology. When I think about next gen technology, right, we all personally, right, have the most latest phone with all the latest apps, and we're running Netflix or some smart TV, right? Usually, personally, people, what we see as companies or personally, we all have the latest greatest thing. But a lot of times, professionally and in our businesses, we don't. Like we may be years behind in technology, and I've never really understood that. But it is definitely a common thing. So one of the benefits of next gen technology, whatever it is, you should have real time visibility. We talk about the right information to the right people at the right time. We talked about increasing productivity. We'll show you some very specific examples of this. Better control, right? Visibility will give you control. Do you have the right roles doing the right work? Whether it's on an AP side or approving WIP or vendor bills or whatever it is, having controls in place. Collaborations between departments, right? What's the, how well is your billing department able to work with the producers, or, from a standpoint of collections with, the controller. So, having better collaboration between your departments and improved workflow as well. Any benefits, Tim, you would want to talk about regarding technology?
Yeah, for me, it's just the automation, and it's, when you're on an ERP system or a common database, you have this ability to measure, monitor, manage. Or what we like to say is you can't manage what you can't see. So if we figure out when you want to see it and how you want to see it, and then it might be a Monday morning, it might be a live dashboard, but then you're focused on the right thing. So one of the examples I give is leverage. I think a lot of the industry doesn't pay enough attention to leverage in their statistical reporting. So we'll talk more about that, but and really just, we have 12 offices, so as you can imagine, we share a lot of work between offices, so you have to have common systems. In the CPA firm, a lot of CPA firms run what I call partner silos, so there's not consistency between one partner to the next partner, which has forever been frustrating for staff because they feel like they've got multiple bosses. I think if we're using the workflow tools, one, we can gather the data faster and easier. We can, one of the things we're working on is automated billing so that we more bill by exception and the computer does some of the billing or at least suggests the billing. There's tools like this that are coming that are just really exciting because they're going to save us a lot of admin time and increase our productivity and get us to be more consistent, whether it's across offices or across partner books. So that's where we're headed, and it's pretty exciting.
Yeah, I mean, by getting on a single platform, you can get more to that one firm, right? That one firm concept that CPA firms are looking to get to. So again, we're going to show you some examples of this, but the concept of truly having meaningful dashboards by role. So whatever your role is, whether you're a manager, whether you're a partner, whether you're in billing or task flow oversight, what do you need to see? And we kind of have this thing what we call as management by exception. So, the normal work day by day or things, if it's in that 80%, I don't need to see that. Maybe every once in a while I'll do some analysis, but show me the, the 10 or 20% of the things that are outside of the norm and put that in front of me so I can really address that. Like I've got some WIP that's way overdue, or I got an AR that's way overdue, or I got certain projects or a certain team member that's way behind on projects. Show me those things, and we'll show you some examples of this.
Yeah, if we think about how the car has advanced from, the cars back in the early 1900s didn't have dashboards, but today a car or a plane has an extremely sophisticated dashboard. But yet today, when we're sitting professionally at our desk, it's like we're driving a 1930 car when it comes to dashboard reporting. And yet we know cars can drive themselves today and just report to us on a dashboard. And that's where our industry is going to go.
Yeah, example. So again, with automation, eliminating keystrokes, manual tasks, having rules-based stuff, like Tim kind of talked about automated billing or, automated workflow, right? Basically when I say complete, automatically put this project on the next person's desk, and things like that. So having this rules-based workflow, or, automatically, alert someone when, maybe their billable hours aren't at target, things like that. And then, again, I talked about this focus on exceptions and alerts. So I think this is our last slide here, or shortly before we get to break. So integration is a truly connected world. So again, ideally you want to have, you want to limit your systems as much as possible. And where you do have to have separate systems, you need to have a platform that allows you to integrate them so they can talk. So there isn't this manual entry back and forth or this silo between them. So Tim, do you have some examples of around this?
Yeah, my favorite example is what I call automation of the timesheet. Forever, there's been a debate in our industry, or for the last probably decade, there's been a debate in our industry about should we just eliminate the timesheet. I've always struggled with eliminating the timesheet because I want to be able to properly measure the opportunities for improvements in my employees and my clients, the cost of my product, am I pricing my product correctly? So in my mind, I wouldn't be a factory if I didn't measure what it costs to produce a product. The reality is our products are produced with artificial intelligence or technology and human capital. So we have to properly manage and monitor the cost of that product. What we're doing is we're automating the timesheet. So today, when you open and move a project, the system will, within 1 or 2 clicks, basically suggest a timesheet based on the time of when you open the project and when you move the project and what type of project it was and which client it was for. And then the system says, would you like to accept, edit, or delete this timesheet? Now we're working on that same type of technology with our soft phone system. So I get a phone coming in. The system is looking into the ERP database to see which client is that phone call connected to. Maybe I'll start a timesheet, and when I hang up the phone, I'll suggest a timesheet for that client in which I could approve, edit, or delete. And of course, over time, the system will become knowledgeable, and it'll say in the beginning, I might have 5 clients connected to that phone number, but probably 80% of my time goes to one of those clients. And so the system would learn that, and with a higher probability, predict the right client to post the time to. We also keep time budgets not just by people, we also keep time budgets by all projects. So if we find that people are stretching their time a little bit, it's pretty easy for us to diagnose. We can tell which employees are editing their time more than others. So maybe somebody that's editing their time a lot is stretching their time. So we're just going to get better at managing, and we're always going to do this as management by exception. So if somebody stays inside of a certain guidelines, we, again, 80-20 rule, we want to focus our time on the top clients, the lowest performing employee, the opportunity for highest improvement. So that's where we're going, and it's pretty exciting.
Great. So this is our next poll question. How would you rate your current technology?
Thank you. That poll question has been launched. And our options for this poll here are strong, adequate, needs improvement, or poor. And again, we'll keep this poll open for about 45 seconds to have adequate time to collect responses. And then as Dirk had mentioned, this will lead us into our first break after we shut down this poll and talk about the results. Okay, we'll go ahead and shut this poll down. Thank you everyone for your responses. And it looks like people are mostly, for the most part, saying adequate in some cases, but also needs improvement. So I think there's some acknowledgement there.
Yeah, and this is typically kind of what we do see. The part I would say is adequate. Does that make you a leading firm? Like, does that put you in a position to be super competitive into the next 3-5 years? And obviously needs improvement. You know, I think that's fair as well. Tim, I don't know if you have any comments.
Yeah, what I would say is that I think most of our firms want to be growth orientated. We want to be what I call high performing firms. So in my mind, if you want to be a high performing firm, this is an area, and you believe, you know, there's all this opportunity in automation and dashboarding and artificial intelligence and open APIs. We have to get stronger in this, in our efforts here, both in not just our financial resources, but also our time resources in improving these systems. And also my experience is that, you know, as CPAs and accountants, we kind of don't know what we don't know. So our perspective about what's okay and normal, we tend to overgrade ourselves a little bit on this. And so I would say somebody that needs improvement might be someplace between needs improvement and poor, and somebody who judges themselves as adequate might be more likely between needs improvement and adequate, and somebody that's strong might be more between strong and adequate. So I think there's a lot we don't know, right? And it's coming fast. And so we've got to put the time and the effort into looking for those resources.
Well, and the other part too, right? Everyone has a day job, so it's really hard to keep up with all of this stuff on a regular basis. And that's where I don't know what I don't know, I think is a good call out.
Yeah, thank you. And I think there's a good question that came up that this comes up often, it seems like nowadays with advancements in technology, but as firms look towards automation and use a bunch of SaaS products, are either of you seeing any issues out there where firms use too many different products that try to accomplish many different things and they kind of silo and overcomplicate the firm's technology, maybe versus a centralized and extensive technology solution?
There's basically two approaches, at least in the technology space, or in the ERP space. There's a concept called best of breed, and then there is a concept called a single source or a single source of truth. I tend to be more of a fan of a single source of truth, right? Trying to get as you can have this best of breed and this best of breed, this best of breed, and then you have to use this concept called integrations to bring it all together. Anytime you have an integration, there is the opportunity for some failure or some disconnect of data. Where if you have a single source of truth, yeah, maybe they might not be as strong in one thing or another thing. They very well can get there. But you holistically have a much better picture of and collaboration and all this stuff, and maybe you still plug in one or two best of breeds, but generally, if you can get to less systems, your software costs should be less, your overall internal maintenance and upkeep should be less, and you also need from an expertise, right? You don't need like 5 different experts, right? Internally, maybe 1 or 2 people is able to support the whole thing. So I'm more of a fan of a single source of truth versus best of breed.
My call out on this, and I'll do it quick so we can get to break, but my call out on this is that if you're buying an ERP system or even a practice management system, you really want to look for a platform and not a software. And in my mind, the definition is a software comes out of the box and you use it, and the vendor improves the software and rolls out improvements as they saw fit, both in time and feature to you, and you accept those and you use them. With a platform, you're part of this community that is evolving the software. And if you want an integration or a migration in the software or a change in the software, because it's a platform, you can customize that and go do it all by yourself. I don't know that I've ever seen a true ERP system deployed in our industry. What I've seen is some practice management softwares, which I think are different than an ERP platform. And we'll talk more about that later.
Great, thank you very much.
Yeah, so I think we're at a point of a break. So why don't we regroup here in exactly 10 minutes?
That sounds great. We'll break for 10 minutes and start back up.
Great.
Okay, I think we're back from our break and we can go ahead and get started.
Okay. I think we'll get started again here. All right, so we kind of talked about our three main visions. Now we're going to be kind of diving into what we call our capitals. And we have 4 capitals that we're going to do a deep dive into. One being brand capital, one being human, financial, and systems capital. So there's quite a bit of information that we're going to be sharing around these capitals. So yeah, let's get started. So these are our 4 capitals. Our first one is brand capital. And Tim, what is brand capital and why is it important?
Yeah, so I think brand capital is what we used to call reputation, right? But it's not just our reputation or our brand capital with our client base. That's the obvious one. But it's also our brand capital with our employees, brand capital in our community with our centers of influence, maybe in industries that we specialize in or technical expertise that we have in a certain area. So it's all that wrapped into one that we have to look to leverage. And traditionally, a CPA or accounting firm has just really looked to leverage that, delivering accounting and tax solutions. I think today we have to look at the opportunity to leverage it in a more diverse or dynamic fashion.
Okay. So let's, and one of those areas is around, sharing services, right? We talked about this. Do you want to just touch on this one more time?
Yeah. So this is really our opportunity, and payroll and wealth are the obvious ones because they've been around a while in our industry. But oftentimes, if we provide competent services in those areas, meaning in service, price, and automation technology, our clients would much rather buy from us as a trusted source than from a national provider or a provider that's sourced through a different, say, a bank or somebody else like Wealth or another wealth management company. They trust us, and that's because our industry has often, for a long time, enjoyed a high level of trust, reputation, brand capital. So what we've done is these are some examples at our firm that we've developed affiliate revenue, and those affiliates offer services to our mutual clients, CPA clients, and we have some clients that might just buy an affiliate and may not even use us for tax or payroll, but they might just use us for HR. But it's really, being an a la carte to services in our community, and what we're doing to allow a smaller firm to have access to these without having to incur the cost of development, so that a smaller firm can enjoy the benefits of money unrelated to time as it relates to offering marketing, payroll, human resource, now business brokerage, all of these revenue sources that our clients need these services, and they would prefer to buy them from a trusted source that we have a relationship with or have vetted out. So it's really a way to enhance our firm's revenue with high margin income and very low investment.
Well, and right, historically, work an hour, bill an hour, work an hour, bill an hour. It's all time related in any revenue. And we kind of, if remember, what is our, the number one issue around people? It's hiring and recruiting. So how do you as firms find revenue that doesn't require billing an hour or working an hour?
Because what we know is we're going to spend less hours doing the work, and we're going to implement more technology. And so this is a shift that high performing firms are going to do in a leading fashion and not a laggard fashion.
Yeah, and our vision here is, right, if there's services that you don't offer, right, make a referral, get a commission, right? Obviously you have to trust who you're making that referral into, and as the referee, we have to make sure we're providing solid services and taking care of your clients. But make a referral, leverage your brand, and get some revenue unrelated to time. And then the flip side of that is if there's some services that our company or our firm doesn't offer, well, we can refer you in, and then you can increase your service revenue. So we see a big opportunity of, again, back to that community concept.
Yeah, one of the great examples there is that Go Virtual Office, the company that developed PracticeERP. They have a partner program for NetSuite referrals that pretty easily a client can get, or a CPA firm or an accounting firm can get, 5-6 figures or more in money unrelated to time on an annual basis, which can really move the needle for a small and medium sized firm.
Yeah, or wealth or payroll, right? There's
Right,
all sorts
right.
of different opportunities where you can leverage your brand.
Yep.
So,
And it's just really solving problems for our clients.
being that trusted source. So it all comes back to my 3 words, right? Know, like, and trust, whether it's a person or a company. So here's our next survey question. How strong do you feel your firm's brand is?
Great, thank you. We just launched that poll that's up on your screen. So on that topic of brand capital, we're going to poll the audience here, and our options are excellent, good, needs improvement, or poor. And again, we'll keep this open for about 45 seconds to collect our responses. Okay, we'll go ahead and shut this poll down. Thank you everyone for your responses on this poll, and share the results. And not a ton of the audience says excellent. We're more kind of in that good or needs improvement.
Yeah.
And go ahead, Tim.
What I would say here is that, like I mentioned on the technology poll, that I feel like the trend or the tendency is for a firm to overgrade themselves. On this question, I think the tendency is, quite frankly, for firms to undergrade themselves. So I would think that the excellent are, of course, we didn't give them an option better than excellent, but I bet they're superior or super, where the goods are probably between good and excellent. The needs improvements are probably between needs improvement and good. And even the poor, I think, they could probably be ranked as needs improvement, but the reality is their customers keep coming, and some of us have a little bit of a deflation because we know over the last several years, the COVID years and a little beyond, our ability to service our clients was impacted by the waterfall of work and the disruption of where we work from and all the change that had to take place. But I do believe it's bouncing back. I do believe it's bouncing back strong in high performing firms. They're focused on it, and we're focused on staffing to get it right. And so I actually believe this is an opportunity, if we're doing the right things, to really improve this area.
Yeah, and I completely agree. I think people are a little too hard on themselves. That needs improvement. We've all had a struggle here or there with a client or two, and sometimes that's just recent memory versus the big long-term picture of who you are and who your firm is. So anyways, hopefully you kind of got the sense. You find some other ways to leverage your brand, and this whole this concept of revenue unrelated to time, any and every way you can figure out a way to get some revenue unrelated to time and, leverage that brand. Okay, so this is our second capital, human capital. So I always, again, Tim, what is human capital and why is it important?
Right, so human capital is basically just the number of people we have at our disposal, or human hours, professional hours we have at our disposal. We often have historically measured it in, revenue per partner average, or number of people per partner in a professional service firm. I believe one of the things we're going to do is start measuring it differently going forward, and that's super exciting for me. because I believe it's a high correlation to a profitable firm.
Great. So this is our next survey question. Which KPIs, I think, do you watch most? And maybe I have that survey question.
Oh, that's correct. And that survey's up on your screen now. And the options here are billable partner hours, ratio of staff to partners, realization, or utilization. And Tim and Dirk, you had kind of alluded to this just a few minutes ago, but as we think about firms adopting technology and kind of thinking outside the box of just billing by the hour and everything, what are your thoughts on value pricing? Do you see that as a good and viable options for CPA firms in the future?
I'll let Tim go first.
Yeah, so I love the notion of value pricing, and I don't think there's any connection between keeping timesheets or not keeping timesheets and value pricing. The reality is, as we become more automated, value pricing is just an opportunity. And let's be honest, in some ways, the clients appreciate value pricing because it's probably going to be a little bit more consistent. And so value pricing is a great way to not only stabilize the cash flow of our businesses, but also it's a little bit easier for our clients to budget and predict.
But right, your AR should improve from that stability of pricing, that they know what they're getting. There are opportunities to automate both the signature, the proposal process, the billing. There's all sorts of opportunities to kind of streamline everything with value-based. The other thing, if it's done right and your costs, like you're talking about, Tim, there's opportunities to really dig into your efficiencies and improve your margins, right? If you have a fixed price and if you can start to dial back the level of effort and costs that go into that, I think there's margin opportunities. So yeah, we're definitely fans of value-based pricing if it's done right.
Great, thank you for that insight. And we will go ahead and shut this poll down, share the results. So most of the audience says either realization or utilization is the KPI they're currently looking at the most.
Yeah, and
go ahead, Tim. Nope.
This is exactly in line with the industry trends. And by the way, it is the exact opposite of what every industry survey tells us we should be watching. Every industry survey tells us the leading indicator that we should be watching is ratio of staff to partners, i.e. leverage. And actually the next most important one would probably be billable partner hours. And believe it or not, the industry would say the lower they are, the higher your profitability. And why is that? Because when you lower your partner billable hours, you tend to work more on the firm and a little bit less in the firm. Think of the billable hour as working on your income statement, and think of the non-billable hour, the effective non-billable hour, as working on your balance sheet. So your shareholder value and increasing the value of your business. And then of course, we've historically watched utilization, daily or weekly. It's upset some producers in this industry because they feel like they're being micromanaged. So we've tried to automate the utilization, the monitoring of utilization, and really get the computer and the dashboard to do it. And then guess what? People just rise to that occasion because the computer is reminding them when they're off. And of course, realization is right behind utilization in our industry. But we are exactly looking to flip this upside down. Make no mistake, we're not forgetting about realization and utilization. They are top 10 KPIs to performance. They just tend to be someplace between 5 and 10, and not someplace between 1 and 5.
Yeah, so let's dig into this a little bit more then, Tim. Do you want to kind of talk about the Rosenberg survey?
Yeah, and so there is a new survey that just came out for 21 and 22, and guess what? About the only thing that changed here was nothing. So you can see that the top one is a leverage metric, and you can see that the top 25% of the firms, fit very nicely. It's the highest correlating statistic, and that's a leverage statistic. Number two ratio of staff to partner, also a leverage statistic. And then actually, what we would say is number 3 is a fees per person is a non-leverage statistic, but obviously very important. But number 4 is really a leverage statistic in that the higher your partner billing rate, again, what we have found is firms that push their partner billing rates, then those firms, their partners push leverage because they don't think they can get that rate. So they push it to somebody else that can do their work at a more modest rate and just allow themselves to review it. So these are, and you can see leverage and utilization and realization are down there, but they're 5 and 7 one year and 7 and 5 the next year. And I believe in 2022, they were exactly the same. So it's amazing how these statistics have for years told us the exact same thing, that leverage matters the most, yet we haven't changed the habits of how we're running our firms. And I think we are on the cusp of that really taking hold.
So here's another example. Do you want to talk about this?
Yeah, this is a survey that we participate in with RSM. We're an RSM Alliance firm. You'll notice here they listed just the top 5, but the ones with asterisks, 1, 2, 3, and 5, are all what they are calling measures of leverage. So it's not that the top 1 is a measure of leverage or the top 2, it's 4 of the top 5. And so when we're thinking about allocating our time, should we be spending more time on managing one leverage statistic that is basically measured in different ways, indicating 4 of the top 5, or should we spend time averaging, 5, 6, 7, 8? Obviously, we all know we should spend more time managing the things that matter the most. And this is just a second survey that proves it. IPA also does a survey. AICPA did a survey. They all screen the exact same information. Our industry has lacked the ability to take this knowledge and convert it into actionable items until now. And that's really what we've done, which we're excited about.
So what are some tactics then to improve leverage?
Right. So you have to, in the short run, we have to look at ways to create more human capital hours per partner without the partners working more. Let's not use that as an option. And so in our firm, we've offshored. We've spent a lot of time figuring out how to appropriately handle 7216 and engagement letters, and we've systematized that. We've got some room to grow there, but we've got a path forward. Like I mentioned earlier, we have about 40 people in 4 different countries. Some countries we're using PEOs. Some countries we've actually put our own boots on the ground there. Some countries we actually offer placement services to other firms, where if another firm wants to hire somebody in one of these countries, we can place them, we can hire and train the staff and place them with the firm, and we can help them train right along, or we can let that firm train that person, because the way we offshore, that person is really the firms. So Dirk, if you hired somebody in West Africa that MBE placed with you, they would be your employee and your responsibility. But if you wanted our help training them, we'd allow you to do that. So that's a great thing for smaller firms that maybe don't have the resources to train. And really, it's just everybody understanding, especially at the partner and manager level, that they have to push the work down. The work, when you're pushing the work down, you're giving a young professional the opportunity to grow and learn. You're not making them work harder. You're giving them the opportunity to become a better professional. So historically, what happens in our industry is the managers and partners say, well, I can just do it in 20 minutes instead of somebody else is going to take an hour. So I'll do that. But while we've worked on our income statement, we robbed the opportunity for that person that has entrusted their career to us to develop and grow their technical skills. And we should be letting them do that and then reviewing their work and training them while we go out and focus on systems and processes and increasing our brand capital and running the firm. So it's really, we have to start running these firms as businesses and not as associations of professionals.
And you want to kind of talk about like the and ones and
Yeah. So at our firm, we are big on what we call and one and CCing on emails. So if a client emails me a question or a manager a question, we have a rule that you are always, every time we reply to a client, we are including one more person. So if a manager is replying, they might include me because maybe it's a highly technical topic and they want to make sure I'm aware of it. Or if somebody else was producing the work, they might just CC that other person in our company so that the employee can see how the response was written and the interaction was had with the client. When I say never, I'm going to say 95% of the time when I'm meeting with a new client or an existing client, I have somebody else in the room. Sometimes if it's a really, basic return, I might have just a new professional in our firm so that they can understand the benefits of having an emotional connection with the client. And sometimes if it's a technical, I have the manager in there. And when we have two people in the room, guess what? We only bill for the highest biller rate. So if I and a manager in the room, we bill my rate, but not the manager. And people would say, well, that must really tank realization. Oh, yes, it does tank realization. But what it increases more than it hurts realization is it increases leverage, and it increases leverage fast. And so it's understanding that we have to, what I love about the accounting profession is it's what I call the greatest pay it forward profession out there. And that not only when we go train our staff, do they get the reward of having us train them, the client gets the reward because they can see that they're part of helping a young professional grow their career. And quite frankly, we get financial rewards as owners. So it's a huge triple win when we focus on what I call and one in staff training, which all is just part of leverage.
Yeah, one of the things we do have in PracticeERP is a concept called difficult level on a project, right? So 11, 20, 10, 40, whatever it is, sales tax, and at someone rates the difficulty of that, a 1 through a 5. And this year I'm going to work all the 2s, right? Next year I better not be doing 2s. I better be doing 3s, and then we provide oversight. So I'm now a 3, now I'm a 4, now I'm a 5. So again, providing the ability to provide oversight and also filter my workload by difficulty level.
And you can see the way we're monitoring leverage here with Aaron and Jennifer in this example. We're not doing it by the FTE, and we're not doing it by dollars of total revenue. We're doing it in an hour increment. So now we're managing leverage by the hour, the way we manage utilization. So now that we manage leverage or measure leverage at a higher frequency, it will be easier for us to move it up on the dashboard of attention above utilization. When we measure utilization by the hour and we measure realization by the job or by the month, and we measure leverage by the quarter or by the year, it's hard to move it up on the attention meter. When we start managing leverage by the hour, we can put it on the higher on the attention meter. So now people are more focused on what matters the most. And it's just super exciting.
Yeah, the other concept you'll see is, newest or less experienced employees need to hit goals or budget more than a senior or more experienced. So again, we've got views that completely highlight that. So again, pass the work down, push the work down, keep your younger staff highly utilized.
Yeah, and so even our most junior staff, what's on their dashboard? Their production budget. That's what we want them to monitor. We want them, and again, it's not this that they're producing for the client's benefit and for our checkbook's benefit. They're also producing for their technical growth benefit. And so we have to see that as pure and good, because it is.
Okay. So definitely, you can see we spent a long time on leverage. How often do you measure partner leverage? Does your firm?
Great, thank you. That poll question is up. Yeah, on the topic of partner leverage and how beneficial that can be. We'd love to hear how often the audience is doing that. So our options here are annually, quarterly, monthly, or never. And we'll keep this poll open for about 30 more seconds to collect responses. Okay, we'll shut this down in about 5 seconds. Thank you, everyone. This poll is now closed. And we certainly have a mix out there, but a lot of people in the audience are saying they never measure the partner leverage. So.
Yeah, and this is exactly what we see in the industry. In our firm today, we measure it monthly on a trailing 12-month basis. We believe that's a good step forward. We agree that most firms are never or annual or quarterly. We've moved to monthly. It's made a huge difference in our bottom line. And quite frankly, we're probably trending towards weekly from monthly or biweekly from monthly on a trailing 12-month basis, because we just want to create a lot of data about that metric so that we can call attention to it. And of course, if we're calling attention to it, we're going to get more, it's where focus goes, energy flows is kind of the line I use. And so if we're focusing more on leverage, we'll put more energy to it. We'll get more results professionally. So
yeah, and if we think about the industry, right, in those surveys, right, leverage is number one, but it's measured the least. Where utilization is 5 or 7 and realization is 7 or 5, utilization is looked at weekly or monthly, realization is looked at monthly. Somehow we all need to flip this, or at least make it up more equal, where leverage is right up there, looked at on a regular basis with utilization and realization.
Yeah.
And we definitely have some ways to do that within PracticeERP.
That's a great call out, Dirk. You're spot on.
Okay. So some other aspects of human capital, right, is happier employees. We talked about retention, recruiting, all of those things that are very important and somewhat of a challenge or pain point or opportunity for firms. This younger generation is used to, unfortunately, staring at their phone and working with cloud systems. So, the ability to have a more current, user environment, cloud is cool, easily spin up new offices it could be a big advantage for your firms. We've definitely talked about automation, right? Doing more with less, streamlining your processes, reducing and eliminating redundant tasks. And then technology, like there's all sorts of staff that say, staff morale, people are happier when they get to work with some of the newer, freshest, latest technology versus, older kind of dinosaur kind of things. So anyhow, just some aspects of, having happier employees. Reducing staff or again, having happier employees, reducing stress. So we all, as people, we don't want to let our clients down. I don't want to let team members down. So, I want to do the right work at the right time. I want to do more fulfilling work. We kind of talked about that. If I'm a more of a senior manager or whatever, I don't want to do simple. I want to get challenged. I want to do level 3, 4 difficulty projects. I want to prioritize my clients. I want to take care of my A clients first, then my Bs, then my Cs. I want to see how I'm doing against budget. Like, so what did this project take me last year, or this task? Am I on track to do the same or better? And in this kind of like self-managed workflow, this not micromanaging. And that, Tim, I think you have a concept of not micromanaging staff for budget hours.
Yeah. So my concept is, I think I'm just old enough. I hate to date myself here, but I'm old enough to remember when you didn't, when back seats of cars didn't have seat belts, and when when we weren't required by law to wear a seatbelt. And so then they changed the rule, I think when I was around 10 or 13 years old. And so, mom and dad reminded me to put my seatbelt on, and I begrudgingly did. And now I advance to today, I put my seatbelt on and I have zero negative emotions around it, because when I don't put my seatbelt on, basically the dashboard of the car annoys me until I do. And so I've just realized the path of least resistance is to put my seatbelt on. I see hitting time budgets as the exact same analogy, where this information is in front of us every day. I know it's an expectation that I hit this, and I know this week to date, and I know where I am year to date, and I know where I am month to date. I believe it'll just become a self-fulfilling prophecy, but it'll become at a much higher morale rating, because we won't be using humans to micromanage employees and their time budgets. We'll be using dashboards, and nobody really gets mad at the computer unless it doesn't refresh or doesn't work. But we know the computer is just a machine. And so if you think about a computer telling me I'm behind in budget versus a manager coming over and saying, why are you 3 hours off? Which one am I going to have a less negative reaction to? I think the computer every time.
Yep. So let's take a look of the My Workspace here, just so you guys can get an example of a day in the life as a producer.
Yeah, that sounds great. We'll take a look at this short video. We'll cue it up here.
Hello. Today I will be walking you through PracticeERP's My Workspace for a staff accountant. So what is My Workspace? It's the ultimate productivity tool for your daily work. So let's take a look. You can see here under My Workspace, I have different reminders. I can see my overdue projects, maybe my total projects that are on my desk. I can see stuff that's due today, this week, next week. I could look at any recent records. Maybe I want to view my time, enter time, record my time. Maybe I forgot to record time. I can see that here. Maybe I got some notes to clear. Here's, I can see different time views as well, whether it's daily or weekly. Across the top here, we have what we call budget to actual. So I can see how am I doing according to my goals. Last year, you can see, or last week, you can see I killed it by 9 hours. This week, I'm about 15 hours short, but I still got time. This month to date, I'm only 5 hours. And this year to date, I'm only 27 hours. So I'm working towards my goals. You will also see this My Active Projects. So this is really the most important section. What this shows is everything that's on my desk, and I can, filter by different types of work. Maybe I want to focus on my A or B clients. I can see how long something's been on my desk or what a due date is. But in the end, maybe I want to start one of these projects. So we're going to start a tax individual 1040 for John and Jane Hansen. So this is a project screen. You can see I got the client information in, how long it's been here, some due dates. It's basically supposed to be at my desk for 3 days. I can add notes here. Maybe I gotta look up some information, send an email or make a phone call to, find out some stuff. Here's all of the tasks for this particular project. And I can see, yep, it's already gone through workup, document management. You can see that this is actually over budget. It's red, so it took twice as long. Right now, the prepare, we're at over 50% of my hours are consumed, so I can visually see where I'm at. But in the end, really what I would do here is I can start a timer. Once I'll do my work, maybe I'm gonna, stop and record, or I could then stop my timer. I could go to lunch, grab a cup of coffee or something. And then once I'm done, I can basically record my time. So it's super easy to use a timer right off of a project. The other thing I could do is I could just go and enter time here as well. And everything kind of pre-populates automatically. So the only thing I really need to do is maybe enter a note, put in my time, 2 hours, and I would hit save, and I've now entered my time. So it's very efficient to enter time against a project. But the biggest thing now is, I can go and update my status. I'm done with this particular project. So it automatically knows through the workflow that it goes to the review stage and it's going to go to Cali. So at this point, I'm going to hit submit. And this will now go to Cali. I'm going to go back to my workspace. And you see I'm at 27 here. If I hit refresh, this now drops off and I'm 26. So you can see, I can see what projects are on my desk and everything else. I can look up client information, AR balance, and some other things. But at a high level, this is my workspace. Thank you very much.
So that's just a quick look at the My Workspace for PracticeERP. Again, you've seen a little bit around, no one likes to enter time. It's just, it's an unnecessary, not unnecessary, a very necessary thing that in the professional services world, but we all have to do it. No one really likes it. So we've tried to find a number of ways to kind of make it not as painful, make it basically a non-event. The other thing is, the ability to have rounding, so if you want to have auto rounding, or you want to ensure that, you're not entering a non-billable code against a billable client, or even not just encouraging, but enforcing time off of a project. So you get really good reporting on budget to actual, or, what, to roll that forward into future years. So anyways, there's lots of aspects to kind of simplify time and expenses. And then again, staying connected, right within again, try to get to a single source, to see time off, to do a kudo to your team members, to have, announcements. Again, all very important things around kind of happier employees in human capital. All right, so Tim, this is our, we're now on to financial capital, our third capital. And Tim, what is financial capital and why is it important?
Right, so it's your retained profits, or the profits that you're either retaining in the firm or investing in the firm. So, and that can be, we have to think of investing in a lot of different ways, but it can not just be working capital to finance, AR and WIP. It can be working capital to buy equipment. And I think one of the things we don't think about is that it can even be working capital to buy excess staff so that we can begin training them before we need them to, be fully functional producers. So I just think a high performing firm is really thinking through how much of their capital or how much of their profits they should retain. That's the first question. And then once they've retained it, how should they deploy it for a maximum return, or the desired return, or the desired result?
Okay. So again, when we think about financial capital, we're going to dive into these four things, right? Invest in your firm. We're going to talk about very specific profitability metrics, one being leverage, we already touched on. Cash is king, right? So what do we do to kind of improve cash? And then, globally, overall firm management, to have that oversight. So our next survey question, what percentage of firm profits are distributed out annually?
Great, thank you. We'll go ahead and launch that poll question that should be up on your screen. And our options here are 0 to 25%, 26 to 50, 51 to 75, or 76 to all of the profits. And we'll shut this poll down in about 30 seconds. And we did get a question based on that video tutorial we looked at earlier. So someone says the UI, the user interface, looks very much like NetSuite. So are these related, and what's the connection?
They are very much related. PracticeERP is built on the NetSuite platform. So it's basically a bundle that gets installed right within NetSuite.
That's great. So it seems like the integration would be pretty easy for someone who's used to NetSuite. Would that be fair to say?
Yeah, the adoption. I mean, the adoption of PracticeERP to with someone who's comfortable or knows NetSuite will be very easily. There is quite a bit that we've done and need to, that we've done. So we have a whole process where we simplify the rollout, the implementation, the ongoing kind of leading practices support with CPA 360. But yeah, if you're interested in learning more, we'd love to talk with you.
Great. And we'll shut this poll down, share the results.
Yeah, and in some ways, I think, Tim, we've talked about this, maybe changing this question to, all partner compensation, including not salary, firm profits, everything. But you want to touch on this?
Yeah, so statistically, historically, if you take all partner income, what we would call net partner income, if you take all net partner income, including partner compensation, the typical CPA firm distributes about 90%, 90 to 95%, meaning basically we leave in just enough to finance, WIP and AR growth and a few equipment purchases, but we typically don't give our balance sheets enough breathing room. And this is especially interesting when we're thinking about, entering into a new world where we talked about earlier how private equity was coming in. Make no mistake, that's one of the assets that private equity is bringing to the accounting industry, is they are going to bring financial capital, and they're going to bring it in a big way. And so we believe high-performing firms are really going to be watching how they reinvest financial capital. So it's first, the question is, how much do we retain? And then the next question is, once we've retained it, what do we do with it? And it doesn't have to be just, let it sit in the checkbook and fund our deferred comp, which is an option. It can also be, do we deploy it in artificial intelligence or systems and processes or administration or increasing capacity? There's lots of good choices there, and we just love to talk to firms about how to do that, what's best for them.
Great. So, invest in your firm is kind of one of the takeaways, right? Rather than distributing 90 to 95%, maybe you retain some. We have some other strategies as well around that. So these are kind of, again, you guys know these probably better than I do. I know Tim for sure knows them. These are some of the top profitability metrics that you need to monitor. Leverage, revenue unrelated to time. We've talked about those two things already. But when we start looking at these things, how can you analyze them, right? Revenue and margin by partner, by project, by line of business, maybe by industry, average charge hour, right? Utilization, realization. How can you kind of slice and dice those various things? When we talk about realization, are you able to kind of look by employee and then by adjustment reason, or by adjustment reason and employee? Maybe there's some training opportunities. In this whole thing, you want to look for trends, and what are other, firms your size doing? What's working, what's not. So these are all kind of key things here. So Tim, what are some tactics around utilization? It is still important, right?
Absolutely.
But what are some tactics to improve utilization?
Yeah, so for me, it's just really about goal setting and then allowing people, to get the right work to the right employee. So one, what we do is we have every employee do their own weekly budget for the upcoming year. So we've just finished all of our weekly budgets. And of course, they're not just telling us how many hours they'd like to work, or they plan on working. They're also letting us know when they plan on taking vacation. They're also letting us know when they plan on taking CPE, and that's a little bit of a guess, as is the vacation, but it's an estimate. And they're also letting us know what percentage of charge hours they think we'll hit. So when we aggregate that, one, we can coach them up if it's subpar, which is important, but we also can predict, when we're going to have, how much staff is going to be off in a given month or a given week in June. So we know, do we have enough staff to get the work done? What we call the gaps analysis. That's what we're looking to figure out, is, do we have enough staff based on our growth trends that we're expecting, and how many people should I have starting 3 months from now, 6 months from now? And so we started talking about this. We've, reduced the time to keep time. So that increases utilization. And really, it's just all happening with less effort and more automation. And so employees are just more excited to be at work.
Yeah, and Tim, why wouldn't I want to be really highly utilized? Like,
Well, there's a couple of
what's wrong
things.
with that?
One, it could be that I'd be creating too much stress on my staff. Maybe my staff is not getting their PTO, they're not getting their education. One of the things we look at in firms is, do they have the proper amount of admin staff? Maybe if a firm has super high utilization, they're asking their producers to do a lot of admin because they don't have enough staff focused on admin. And so it's different in every firm, and every firm has to look at it for them. But too high of utilization can lead to it can be a leading indicator of some cultural problems. That might lead to high turnover.
Yeah, one of the things too, right, and you even kind of alluded to it, right? Utilization at an individual and employee level needs to be monitored, but utilization as a whole, right? Total production hours by total work hours, including admin, right? So again, if we talk about systems and automation and AI, right? If you eliminate systems, you should be able to at least eliminate or not have to hire admin staff, which again, then your total firm utilization should go up. And that definitely would be a profitability measure. All right. So realization. What are some tactics to improve realization?
Well, for me, it's getting the right work in the right people's hands, and then making sure that maybe the clients are bringing in the work timely or responding to the questions timely. Maybe the managers are focused more on reviews and less on production of work, or more on training. Because if we get that entry-level staff to do the work, that's really where we can drive the average up. Or even if we think of offshoring, where a lot of times an offshore employee comes at any place from 20 to 50% of what the equivalent U.S. experienced employee would cost. And again, I used to think of that as exporting American jobs. Today, I see it as saving American jobs, because most of our firms in our industry the reality is we don't have enough people to get the work done. And so we're left with the choice of culling the D clients, or maybe keeping the clients and not serving some of the A's and B's, which is what some firms do, or we have to go hire more employees and figure out how to do things more efficiently. And for me, I just like plan B better than plan A as a growth-oriented leader. So, but the realization, the realization can be managed not only by employee, but by client, because we have all the client project budgets set. And so one of the small features I love in PracticeERP is that when you do rollover budgets, you can set them at 97% of what they were last year. So if a budget last year was supposed to be 5 hours, and we say we want it to be 90% of last year, this year it'll be roughly 4.5 hours. And so we can almost keep raising the bar without it being real out in front of the producer's face. And it should get, because as we get it more systematized, it should get faster. So yeah, there's lots of neat features inside of the ERP system on that.
Yeah, and another thing around realization, right, is, or build realization, gross profit, all those kind of, and even gross profit by hour, the ability to look at that by niche, right? Maybe some industries are really highly realized and profitable, and other industries you're not. Well, maybe, focus more, running realization and gross profit by client grade. These are all options, or by adjustment reasons. Having that information, and getting down to like actually a gross profit per hour, to really see, where you're truly profitable and not in different segments or attribution. All right. So then some of the cash, right? Cash is king. You know, billing on a more frequent basis, right? And we'll talk about, you know, your aged WIP. AR is always a concern that we hear over and over again. So we've got some strategies around AR, you know, cash in hand and distribution. So again, same thing, benchmark against other firms, you know, look for trends, who are the high achievers in this area. So let's talk about a little bit around WIP. Tim, you want to talk about WIP?
Yeah, so one of the things that we've been focused on is really setting WIP standards, and it's really starting to pay off. So we started with, you know, one, we didn't want aged WIP, so we were, you know, managing that. Then we were like, okay, what is an acceptable amount of WIP? And what we concluded at our firm was that we feel 15 days WIP at the end of the month is acceptable. So for instance, if I come into a month and I have $50,000 of WIP and I do $75,000 of production, so therefore I have 125,000 of what I'll call goods available for sale. If we all think back to the cost of goods formula, beginning inventory is the beginning WIP, purchases are the new WIP. So that brought me from 50 to 75 to 125. And in our firm, the allowable standard is that I have half of the 75 left, so half of the current month's production. So I have if I have 37.5 of or less of WIP, I've passed. If I don't, I either need to go back, or if I let it go, and let's say I have 60,000 of WIP, and we bill at the end of the month, then we just simply ask that manager to bill mid-month. So we ask them to bill on the 15th of the month if they typically bill at the end of the month. And we have some managers billing regularly on the 15th and some managers billing regularly on the 31st. And of course, if they don't pass, they just do a second bill run on the upcoming alternate period. So if I typically bill on the 15th and I didn't pass, I would do a bill run at the upcoming end of the month, and vice versa. If my typical bill run is on the end of the month and I don't pass, I would do a bill run on the 15th. But if I do pass, I don't do a bill run until the end of the next month, just like we historically have. So what we found is that managers and partners that build aged WIP, you know, they also are having some project management issues. And so by getting them focused on the WIP, they focus more on the project management, which gets the client service up. And I think the thing that we like to talk about in our firm is that we all need to grasp that WIP and AR are depreciating assets, meaning they're never going to be worth more as they get older, and they're probably worth less because there becomes a disconnect from the service that we provided to the cash that the client should be paying us for these. So we want to manage the WIP to what we think is a tolerable level. We also don't want it to get billed out so fast that we misbill. So I've seen some firms where they're dangerously close to billing too fast, and we also think, you know, that can be a problem.
Yeah.
So just a great discussion to have internally and customize each firm's procedure to the type of work they're doing. You know, it's more and more we're seeing advanced deposits being asked for in December, January. I have an audit partner friend at a different firm that, you know, they carry almost zero WIP because she gets WIP in advance, or she gets advanced billings, deposits, and you know, so it's great for her cash flow.
Yeah. So yeah, definitely a depreciating asset. You know, I know the concept value-based billing got brought up earlier. We definitely have a vision also of, and it goes along with value-based billing, right? So for a certain project type, for a certain client, as long as all of the WIP is within some tolerance, say 10 or 15% up or down, let's just automate it. Let's just write down the WIP, automatically create the email or the invoice and send it out. Like no one has to look or do anything in the billing process. You know, now where it's outside of that tolerance, how about we present that and then, you know, someone has to make a decision. But we just see this whole area ripe for automation going down the road. All right, I want to make sure we still keep on time here. We do have another break coming up. We have a couple more slides. So financial capital, right? We talked about AR. One of the things we do within PracticeERP is we provide a banner. So you can easily see if a client has an overdue balance, or if there's some primary collection note. Maybe you have a firm policy where you don't do the work until it gets collected, or at least someone's in the know before you put a bunch of time in on a client that has aged AR. The ability to email invoices or statements, the ability to click to pay, and have that automatically create the accept customer payment and hit your financials and your GL like immediately. So all different things to kind of improve cash. And then again, visibility. Which partners have the highest AR? Maybe you got to call them and give them a nudge, or managers. Within my book of business, which clients should I call first based upon the highest aged AR? The ability to look at a client level and see how AR is trending, or how is AR trending for the firm wide. All kind of key things. All right, so I think we're ready to take another break. So let's take a 10-minute break.
Okay, that sounds great. We'll start back up here in 10 minutes.
Great. All right. I think
Okay,
we're ready to. So go ahead.
yeah, just gonna probably say what you were back from the break. I think we're ready to kick off if you guys are.
Okay. All right. So we're on the home stretch here. So let's start off with a survey question. How would you rate your reporting capabilities?
That survey has been launched. So our options here are strong, adequate, needs improvement, or poor. And we will keep this poll open for about 30 more seconds to collect responses. Okay, I know some people are just coming back from the break, so we'll give you about 5 more seconds to respond to this poll if you haven't had a chance yet. Okay, thank you. We'll shut this poll down. And looks like not a lot of people saying strong or poor, mostly kind of in the needs improvement to adequate range.
Yeah, and this, I mean, again, that's kind of goes along with, you know, systems and everything else. Tim, any comments around this?
Yeah, I think the adequate and the needs improvement is really around because, and even the people that are strong, you know, it's what we get used to, right? So our reporting is kind of the same today as it was 5 years ago, as it was 10 years ago. And so it feels adequate because we don't know what's possible. We haven't spent enough time thinking about how to improve it or dreaming up ways to improve it. I think once we start imagining ways to improve our reporting, we will surely realize that there's a gap between what we're doing and what we could do in a higher performing way. And that's really the journey that we've kind of been on, is that, you know, compared to what it was, it's not bad. It very slowly gets better over time, but it just doesn't ever feel strong or great or high performing. So we see it as an opportunity for the industry to improve, and for the industry to improve the softwares and platforms, so that the users can get better information at not only faster, but also at a more relevant time.
Right, make it actionable, make it timely, right information, right time, right people. I'm curious, like, you know, where we see the 60% at adequate, you know, what percentage of that is off of an Excel spreadsheet? So anyways, let's kind of dive into this a little more then. So again, we've talked a fair amount about dashboards, having that information right at your fingertips, and metrics matter, right? You know, the ability to filter or group, to look not just back, but maybe look forward. You know, easier ways to kind of, you know, slice and dice the data. You know, there's, you know, a CPA firm is really about clients and employees. And one thing I've learned working with this industry now over the last few years is you guys definitely do a good job of dissecting those in lots of different ways. So you need to have that data, and it needs to be, you know, easily accessible from a single source. We talked about trends. Trends are super important. You know, how am I doing this week versus last week, or this year versus last year, against all sorts of different things. You know, how do you compare against your peers? Can you easily, you know, if you go fill out one of those surveys, how much time does it take you to do the work, to get all the data together to fill out that survey? And then, you know, doing what if scenarios when you start looking at like capacity, for instance. You know, here's all of the 1040s I need. These are all the hours that I need. Do I have enough staff to match that? You know, all sorts of different things that data is the new gold, they say. So let's take a look at what managing partner or firm analytics can possibly be.
Great, thank you. We'll get this video queued up here. And like Durkin said, this is the PracticeERP video and from the perspective of the partner role. So,
Hello. Today we'll be walking through PracticeERP's partner role. So let's take a look. As a partner, just like a manager and a staff, we have what is called the My Workspace. And again, what is the My Workspace? It's the ultimate productivity tool for your daily work. So as a partner, a partner typically is a producer. They can see any of their overdue projects. They can enter time, recent records, look at notes that they may need to clear. They can see how they're doing according to budget. Here in the My Active Projects, they would see, what's on their desk. And again, they can prioritize, for their A and B clients, or, how many days something's been on a desk or due date. But again, we have another video that I strongly encourage you to watch that goes into a lot more detail about working with projects in My Workspace. So please watch that video. But also as a partner, a partner has clients and a partner has a book of business. And again, we do have another video. It's the manager video where we go into more detail about my clients and my team. So I strongly recommend you to watch the manager video as well. But just a quick overview, as a partner, I can see how many projects that are overdue. I can see how many clients that are assigned to me, time that's against my clients, sales against my clients, any aged WIP or aged AR that, I can keep an eye on and monitor. Here's overdue projects. And again, I can highlight my overdue projects for my A and B clients and see what we can do to kind of move those forward. Quick view of WIP and AR that's over 60. Same thing, there's a team view. So if you run a department or an office, or you have just direct reports to, we have all of those different designations, and I can see like who's missing budget last week, last month, this month to date, this year to date. We even got a visual queue where I could see who's missing budget and who's killing it. Here's overdue views. Again, people who report to me that have overdue projects. Here's people who report to me, and I can see how they're doing regarding billing and realization and their average rates. So again, lots of great information, whether I'm looking at for my book of business or my team. But we also now have this tab called Firm Analytics, right? As a partner, it's a more macro view of the firm. And that's what this particular tab does. I can see, overdue projects firm-wide. I could see, who are my top 15 clients in sales? Who are my top 10 clients in AR? How many new clients have we got this year versus last year? Maybe I want to look at aged WIP by partner or aged AR by partner or manager. So which partners have the worst WIP or the worst AR that really needs to be addressed? How's our receivables trending firm-wide? How's our sales trending this period versus last firm-wide? From a billing standpoint, which partner's book of business is doing better than another partner's book of business? Here's a visual cue of how our overall AR is trending. Where's our business coming from? So, 31% from individual, 17% from CAS, 18% from tax, advisory is 23%. So again, a nice, easy overview of where revenue is coming from. And again, how are sales trending month by month in total? So again, this is a very macro view of your firm and all sorts of reports, project reports, build, WIP, and realization reports by all sorts of different segments, time reports, open WIP reports. So again, lots and lots of data that can be analyzed. And then one final thing I will call out is this My CRM. So PracticeERP comes with fully integrated CRM. So as a partner, right, you're always kind of working new leads, you're working prospects, maybe you're tracking your referral partners, bankers, attorneys, so on and so forth. What tasks do I have to do? Maybe make some follow-up phone calls. Maybe I want to quickly enter a lead. How's my new business tracking? Where's my opportunities coming from? Here's my specific opportunities, and I could come in here and move my dates out. I can change the stages. I can change my dollar amounts. So you can quickly edit and change your pipeline information. But at a high level, this is the login for a partner. So if you would like to learn more, please contact us. Thank you.
All right, so that's a quick look at a managing partner or a firm dashboard. Tim, go ahead.
Yeah, the one thing I might want to call out, Dirk, is on the video where we saw the white boxes. Those are customizable. So what one firm might have on the firm analytics dashboard might be different than what another firm would have on the analytics dashboard. It isn't static. And it isn't decided by the vendor. It's decided by the firm.
Yeah, we've also recently released what we call a trend analysis tab, where you can look at production, realization, utilization, leverage, all kind of on a month by month basis, and compare this year versus last year. So some pretty cool stuff. All right, so this is our fourth and final capital, systems capital. Tim, what is systems capital and why is it important?
Yeah, so for me, it's your tech stack. So you have your processes, and then you're using your human capital and your processes and your technology to create the result. So think of this as your tech stack. Think of it as the systems that you're building. And I think a lot of times as firms, we don't think about how to tie these together. We don't think about how to consolidate them or improve them. And so for us, this is an area of opportunity for CPA firms and accounting firms alike to think about how they can improve their technology.
Great. So definitely there's all sorts of stats out there and articles around the value of technology, both for small firms and large firms. Employee satisfaction, client happiness, efficiencies, all of those things. So just some key call outs here. So our next survey question, how many systems are you currently utilizing for your operations? Don't think about your production software for tax or assurance, but just to run your operations and admin functions.
Great, thank you. And that poll has been launched. That's up on your screen. Our options here are 1 to 3, 4 to 6, or more than 7. And we got some good questions coming in from the audience. So thinking about that last video, the dashboard, some of the metrics we saw, can you discuss how that data gets captured or entered into PracticeERP?
It more or less happens naturally, I guess, throughout the process. So if you remember seeing the time entry aspect, right? So we easily create a time off of a project. That time record is now associated to the client, the project, the task, the service item. The client is associated to a partner, a manager. That time record is also associated to a client office, an employee office, a line of business, a department. Like it just kind of goes. So just by transacting, by entering time, that just happens. We also have a very streamlined billing process to do write up, write down. So all of the realization, the adjustment codes, like it just kind of happens. It's part of the system, if that makes sense.
Yeah, and it sounded like you showed us earlier there was a way to record time. So when people are on a specific project with a specific client, they can press a button and that time gets captured as they're working on that till they press stop. Is that
correct? Yep. And I mean, so time, expense reports and client fees all roll into what is called a WIP record. That WIP record has all of the attribution. We track the adjustments, the write-ups, the write-downs, and then from that we drive time reporting, production reporting, realization reporting, gross profit, you name it. It's all more or less off of that WIP record and the time and production records.
Mm-hmm. And then kind of this person also had a follow-up question as I guess maybe looking at it from best practices, utilizing this software, who would enter new clients for all those services as they kind of come into the system?
Yeah, so again, that's part of our what we call our personalization or implementation process. It's firms operate differently. A lot of times the task or the firm admin department creates all new clients, versus everybody in the staff, all together, right? The problem is if you have everybody do it, no one does it exactly the same, so you get bad data. Where if you can centralize the input, you're going to get better data, more consistent. The other piece too is with the CRM, right? You have a lead, we convert the lead to a prospect, and then that prospect automatically converts into a client. So that's also very streamlined as well. But it is firm specific. Go ahead, Tim.
I think there'll be a lot of automation coming in this area where, today we are automating the onboarding of an employee. I think there's also a lot of opportunity to automate the onboarding of a client where maybe even we have the client submit the data and then we have an admin person, review it, compare it, say to a tax document, a filed tax document, and then just simply approve it versus entering it. So I think we're going to see a lot of automation in the future around onboarding clients.
Yeah, where we're going is, like you're talking, Tim, basically clients can self-enter a lot of that information to take some of the burden off of staff, and then also to have integrated work or doc management. Engagement letters automatically get signed, other required documents get signed and associated, and it's all kind of in this easy client portal. Again, all sorts of different things to take steps away and make things easier for admin.
And then Dirk, you just touched on this a minute ago, but someone in the audience is asking, what were the three things that make up the WIP? They know the time, the expense report. What's the third component?
Client fees.
Client fees. Okay. Thank you.
Mm-hmm.
All right. And we will go ahead and shut this poll down, share the results. And a lot of the audience saying 1 to 3, and some saying to 4 to 6, and a few saying more than 7. Yeah.
And we definitely see, the 3, 4, even up to 7 quite frequently. Yeah, Tim, you want to talk about your firm before you adopted PracticeERP, how many systems you had?
Yeah, so with PracticeERP, we eliminated a CRM, project management tracking system, a time and billing system, financial reporting system. So all of those have been eliminated and consolidated. And now we're automating them, the processes, and then we're also connecting to other systems. So, but we're connecting to what Dirk might call a best of breed HRIS system. We're connecting to our own document management system, our own web app, our client web app, and our own soft phone system. So we're excited about the possibilities.
Yeah, so systems capital, right? And this is the story, right? So we definitely see, whether it's Salesforce or Able or other systems out there, or no CRM at all is very common within CPA firms. Unique practice managements, which literally is client time, WIP, and billing, and then it just sits by itself. Workflow, there's different workflows. Some of the practice managements have light workflow, and then your financials is always over. Your AP, GL is some journal entry that happens, once a month or once a quarter, and then either Excel or Power BI or whatever, and basically with this you get lots of spreadsheets, right? I've been talking about that now quite a bit, and this is what we commonly see. So wouldn't it be great to have a unified solution that does all of this within one platform? That yes, you can leverage the current technology, leverage all this stuff, and then still make it your own. You're not fully stuck into this box as well. And again, if you have all of this in one system, right? You could enter a lead, you could create opportunities and pipeline reporting, and work these possible opportunities, set close dates, get signed engagements, you can get a new client. Once you have a client, right, you're going to set up projects, you're going to assign resources. Those resources are going to complete and move tasks forward. And as they do this, right, they're going to add these three things. They're going to enter time, they're going to enter expense reports and client fees. And all of this then, hits a WIP record, which you guys are very familiar with. And then the ability to have a streamlined process to write down that WIP, consolidate, make nice clean invoices, email those invoices out with, click to pay. And when they click to pay, it does the accept customer payment, clears the AR, hits your bank account automatically. You basically just watch the bank balance grow. And then all of that, hits the GL financials and analytics, right? That's an all-in-one kind of future state and, eliminating a bunch of systems. So again, this is the slide we had: real-time visibility, increased productivity, a better control, collaboration, and improved workflow are all, a number of benefits you would get with, True Systems Capital. So this is the part where we basically, are you ready, right, to future-proof your firm for the next 3 to 5 years? And Tim, do you want to kind of talk towards this a little bit?
Again, for some firms, this will be a survival strategy. And for some of it, it'll be a growth or a thriving strategy. I think eligible firms are quite frankly a firm that is looking to modernize their firm so that they can be acquired. I think firms that are looking to be an acquirer should consider it, or somebody that buys firms, or if they just want to accelerate their organic growth. Really, this migration is applicable to all firms in all situations. And, we've had great success. One of the things about the team over at PracticeERP is they are really good at moving data and standing firms up. I mean, we've stood tax season firms up in February, in December. We've had firms of more than 350 people that we moved in, with very little downtime, non-production time. So it's really been fun to watch the PracticeERP team implement. Their speed and ease of implementation is something like our industry has never seen before. So it's just really fun to be part of.
Yeah, so we're going to kind of, again, whether your firm plans are to sell, acquire, or grow organically, we're going to talk about that a little bit more. Our next survey question. So we talked about these 4 capitals, right? Brand, human, financial, and systems capital. Which of these do you feel is your strongest?
Great, thank you. That poll is up on everyone's screen. And we'll give you about 30 more seconds to get your responses in for this poll. And we had another good question come in. So curious, what Dirk and Tim, what you think about this one. Where do you see the balance and mix of in-person versus remote work kind of going in the future?
Tim, I'll let you go first.
Yeah, I believe we are entering what we want to be as a firm. We call it a by choice world, meaning it's not only by choice for the employee, it's by choice for the client, it's by choice for the employer. But much like a couple of years ago, there was a big push around dress for your day. I think now this is just the same type of philosophy is we're just trying to create relationships with clients and employees or associates that are profitable relationships. And if employees want to work from home, that'll be allowed. I think we will enter into a world of accountability that to have the right to work from home, you will have to prove that you can be productive at home and be able to grow your skills at home. Or maybe you'll move towards some hybrid fashion where you're in the office, creating the water cooler and the mentorship that we've all benefited from over the years. And so I think we're moving towards a by choice world with some accountability standards behind it. Because as we become overstaffed, and we have the ability to be overstaffed today if we choose to be, firms are no longer going to just hang on to employees on their roster because they think they need them to survive. There's going to be some performance standards and some accountability that will be expected, and that'll be healthy for the client, the firm, and the individual.
Yeah, I would say, we were very much like other companies, pre-COVID, we were very much an in-office culture, the whole water cooler and, sit along and shadow somebody side by side, office to office. Post-COVID, I would say almost 90% of our staff is remote. It's actually, we found it to be an advantage from hiring. We've now been able to hire, throughout the U.S. More than, just in our town or our city. So that's been a huge benefit. But I also do see this I see a kind of a migration back to the office. There's some people I think are getting a little, they miss that office environment. They're getting a little lonely at home. So I see a mix of everything, but I think you just have to be flexible.
Thank you for the insight. We'll close this poll down, share the results, and a lot of the audience says human or financial, some say brand, very few say systems. Capital would be their strongest.
Yeah, so that's our opportunity, right? That's our opportunity for growth. And I think this is spot on. I mean, almost all the time, brand and human are near the top. But I don't know that we've ever done this presentation where systems wasn't the laggard. And I think that screams opportunity to us to improve our firms.
Yeah. All right. So again, is your firm ready? And this just kind of dovetails, like brand capital, for the most part, we talked about, you all have it, know, like, and trust. And again, like Tim said, I think people underrate their brand capital, but if you should leverage it. We kind of talked about that as well. Human capital, 75% of CPAs are going to be retiring here in the next 10 years. So what do we do there? Financial capital, right? Invest in your firm, right? Try to retain some earnings and invest in your firm. And how well are you able to manage by the numbers, right? We talked about looking at leverage as an example of that. And like you said, Tim, we have yet to see a CPA firm truly have this in place around systems capital. So again, and this is, whether you're going to sell, you're going to acquire, or you want to sustain, right? So if you're going to sell, an acquirer wants clean books. They want, they would love to have your processes all up to date and streamlined, right? If you're going to acquire, you need to have a platform in place that allows you to easily absorb a firm in or firms into your processes and so on and so forth, and sustain, right? If you want to continue to grow and thrive. Tim, do you have any other comments on this one?
Yeah, just this is how it usually works out. So, we need to play to our strengths, but also bring up our weaknesses. And this is really, I think we are going to see a boom in our industry of good firms, high performing firms, strengthening their systems capital. That is an opportunity for, I think, exponential growth or an improvement of a CPA firm, so that we're not so reliant on our brand capital and our human capital be successful. if we have great systems capital, that will be part of what holds the client or attracts the client, as opposed to just having a great reputation and a human and great people that service the clients. Now imagine if we added a systems bar that was much higher, say similar to the brand or the human bar. I think our firms just get stronger, and this isn't a net zero sum game. So we can raise the systems capital and hold on to the brand and human capital, and in fact, maybe even grow them. So again, just screams opportunity.
All right. So I think this is our final survey question. When do you plan on updating your operational and admin technology?
Yes, this is the 13th and final poll of today's events that is up on your screen. And our options here are this year, next 3 to 5 years, or never. And we will leave this poll open for 30 more seconds to collect responses from the audience. Okay, we'll shut this poll down in 5 seconds. Share the results, and a little bit of a mix out there. Some of the audience says next 3 to 5 years, but also some are saying this year, next year as well. And then less than that, some people are saying never, which in terms of technology, I don't think never really makes much sense, but thankfully the least amount of people said that one.
Yeah.
Yeah, and I think my call out here is, the sooner you act, this whole technology or systems capital growth, this ERP adoption of an ERP, we at our firm, we really see it as a journey and not a project. I mean, it is a journey. It's quite frankly, it's a lifelong journey of improvement. But it's exciting because you're spending your time improving versus changing systems, and putting your resources towards improving versus bouncing around on systems. So I would just encourage people to, one, take a look at it sooner. And, even the firms that are looking at it now, most of them will consider adopting maybe 6 months to a year from now. There's very few times where you take a firm and they do a demo and, 6 weeks later they want to implement. This is a process to get your firm on board, get your partners on board. So we just highly recommend that you start looking now, and then probably plan to adopt sooner than what would be comfortable, because 3 to 5 years is a real comfortable example or answer, because it feels just far enough out that it's not urgent. And I think we need to move this into the important and urgent section of our time frame.
Yeah, and I would say your journey comment is spot on. We have firms that like, well, maybe I'll they're ready, but they're like, well, we're going to do it after next tax season, right? Because they don't want that disruption. And in a lot of ways, like, again, I get it, right, from a disruption, and I don't want to have, through tax season, but like, look where your firm would be a year from now if you already went through that journey, from comparatives, from streamlining processes. Like, start sooner and get there. And yeah, you may be a little rocky. I actually think it'll be better, but there's a lot of advantages to starting sooner than later, whether it's evaluation or just let's just go do it. All right. So, the vision, right? We talked about the community, we talked about the solution, endless insight. So Tim, do you want to talk about CPA 360?
Yeah, so CPA 360 is a community of CPA firms, and really see it as like a user group, a buying group. We've seen these in different industries where we are trying to just help solve firms' problems, everything from recruiting to marketing to systems, such as to processes, to developing money unrelated to time, to sharing work between companies. So we have multiple user groups in place. Today we have a partner, an admin, and a producer's user group. We're probably going to split the user group into an audit user group and a all other, which for most firms is tax and CAS, client accounting services. But yeah, and it's really just, having, if you have a problem, just knowing somebody that basically is running the same race you are, that you can go to and you have a relationship with, and they're going to be committed to helping you. It's really a powerful environment. So we encourage all firms to think about joining a community that can help them. And this is our community. So
yeah, and it's very much focused around leading practices, like how to become a high performing firm. So we talked about the firm and basically a solution, right? PracticeERP, you've heard us talk about it. You've seen a couple short videos. One of the things that I've had clients actually tell me and associates tell me about an ERP. You know what an ERP can be? It can be your best employee ever. And you want to know why? Because there's no HR issues. They show up on time every day. They actually, you have to train them, right? You have to configure and work through the process. You do have to train your ERP, but once they're trained, they perform exactly like you train them. And it is true. It can be one of your best employee ever, but it takes hours and effort, and but the backside can be super beneficial.
And they're perfectly scalable too. So as your firm grows, from 5 people to 5,000 people, the ERP system just grows right along with it.
Correct. Yeah. I mean, I know, Tim, you had an acquisition it was actually in January, right before tax season, and they just within a couple of weeks they were.
Yeah.
So anyhow, so we see the combination of that community aspect that we were talking about with a true leading edge, technology base for CPA firms, can provide the roadmap, the building blocks for a successful future. So yeah, I think that concludes our webinar.
Is there any questions?
Yeah, thank you so much. So yeah, just to address a couple questions here, I think, Tim, this one would be for you. What were some of the immediate changes you noticed in your firm when you adopted PracticeERP?
So that's great. The first thing I would say is I really thought with the system changeover, we'd take a bunch of steps backwards before we took steps forward. Actually, our utilization spiked pretty quickly. I think we were down we measure utilization week over week. I think we were down for like 2 weeks. And since then, it just kept growing and growing. Now, after we're in years 2 or 3, it's not going to just keep growing, but ours has actually gone down a little bit, but it's because we've added a lot of admin people to help onboard firms. So our production utilization is stronger than ever, which is really the key metric. And really, I think what I would say beyond that, the thing that was exciting was probably 1, 2 months in, 3 months in, we saw a huge uptick in staff morale. I mean, just massive, because they all had this hope that there was an improvement in the process, an improvement in the system that was, doable, executable. We just had to dream it up, do it, and execute it. And so really, when we implemented in July, I would say going into that tax season, we were just on a high, and it's really just continued because we know that we're on this journey, but we know that every time we focus on the journey, it pays dividends, both short and long term. And so the ROI and really the ability for staff input at all levels is pretty high. So our firm has just been a huge culture uptick.
Yeah, thank you. And kind of as a add-on to that question, how long would you say, we expect some pain a little bit when we implement something like this, but how long would you say it typically takes to get software like this implemented and then
Yeah.
kind of get people accustomed to using it in the firm?
So, implementation is different for everybody, right? If you think of it in terms of a journey, the true answer is never, because you're always going to want to evolve. But if you think in terms of standing you up and being productive, the way that Dirk and his team transfer the data, and all your employees are set up, all your projects are set up, your financials are set up, everything's set up. So like the firm that we implemented on February 6th, they were down for I think about 90 minutes, and then they were up, and everybody was producing. And then we basically hold their hand through the first billing cycle and the first financial statement cycle. And then they have one of the things that's really unique about the way we provide practice support for PracticeERP is you don't call the software company. You actually call CPA 360, which is a division of MBE, and MBE is your first line of user support. So you are getting user support from a firm administrator, a controller, somebody in the same industry that is using the same software as you, and so they can give you a higher level of support. And then, of course, if there's a software or a platform technical issue that we can't answer, we can elevate to GVO and get their help to get you the technical answer, the software answer, the coding answer that maybe we can't get. But a lot of times, a lot of people's questions are, how do you use this software? How do we develop this practice? Or how do we take our practice and modify it to the software? And really what we have found is that what we call champions or high power users are in a better position to help than software programmers or people that get it put into a Q&A chat and don't actually use the software. So it's been pretty fun for our firm to help. And we've got quite a few firms that have onboarded and quite a few more coming. So we're excited.
Yeah,
Great,
I would.
thank you.
I can just tag along real quick on that. Typically, it's about an 8-week implementation from the yes to go live, and the focus of go live is that my workspace, that one tab. Like, what's my projects? How do I enter time? That's our focus, is to keep people as productive as possible.
Yeah, thank you. And is PracticeERP customizable based on the size of the firm?
It is. It's completely scalable. We got firms that are 10 to 20 people, and we got firms that are up to about 300 so far to date. But yeah, you can add custom fields. That's that platform concept that Tim was talking about. We can add custom workflow. So I refer to it as clay. But you definitely start out with all this leading practices. Great stuff.
Great, thank you. Well, Dirk, Tim, thank you for your presentation today. As firms think about how they can keep up with the ever-evolving landscape in the profession and think about what they need to focus on as they look out to the future, I think today gave us a lot of great insight and guidance. To everyone in the audience, we will share Tim and Dirk's contact information in the follow-up email. I know they're always happy to connect with you as you have more questions around either PracticeERP or what the future of the accounting profession looks like. So just to recap our housekeeping items from earlier, if you qualified for CPA, you can download your certificate from your Incorsa account. That will be accessible starting 1 hour from now, so look for it there. As we had mentioned, today's session was recorded. We will post the recording to your account at some point this evening. You'll be able to go back through anything you'd like to cover again. And once you shut down today's webinar, there will be a brief pop-up survey. We do greatly appreciate your feedback on that and take that into account for future events. Dirk, Tim, thanks again for being here for your presentation today. Thank you everyone in the audience for attending. We look forward to having everyone back in the near future. Have a great rest of your day.
Thanks, everybody.
Thank you. Bye now.